Credit cards versus the stock market. And I can see why maybe some folks carry a credit card balance. Bless their little hearts. You know, the kid got sick, they just got married, they're in over their heads. But on the other hand, some people still have something like $8,000 to $10,000 on their credit cards. And if they do anything else with the money, that makes no sense. We should note that credit cards generally do not get a tax deduction, and middle-class taxpayers many times have a 24% tax rate. California's being the highest, 9.3, and you know that adds to exactly 1/3. Now, there is something called a qualified USA dividend tax treatment, saves 9%, and also states that don't have an income tax, turns out putting both of those together about 1/4 instead of 1/3. Thus, you can figure out what the credit card rate, say 20%, would be had it compared to an investment in the stock market, and that would be maybe 30% or 27%. We could compare that to, say, the S&P 500, a broad market-weighted index, and you have to go back some 60, 80 years to get any case whatsoever to get that beating that of a credit card. And that's not risky. If you had paid off your credit card instead, we could also compare it to the Dow Jones Industrial Average. Fewer stocks, but many of them do have that USA dividend qualification. And again, you have to go back half a century to get equivalent returns. And again, the market's risky and credit cards are not. But this analysis is looking at the extremes. More assiduous approach would be to be taking all of your investments and loans together and rank them after tax. With some of the highlights being is that a pension delays, thus a present value analysis is nice. Both of your IRAs probably will get the same return. Look at that. Look what came out number one. Pay off that credit card. Is investing in your IRA account and maybe the stock market, then maybe pay off that auto loan because it's not tax deductible, and then even put more into your investments before ever paying off your home loan. That's really a cheap source of money because it's tax deductible. And here's a little recent blurb oversimplified from Wallet Hub I did with drcinvests.